Welcome to the Future of Challenger Banks. I'm Jason Bates, and it's been 7 years since I first had conversations about starting a bank called Starling. I had to check with Anne Bowden, the CEO, that she was actually talking about starting a retail bank because it seemed so crazy. I went on to co-found Monzo and then 11FS, a fintech challenger consultancy, where I've led projects to build a variety of new fintechs and challenger banks. Metal in the UK, Mox in Hong Kong, and banks in Saudi Arabia, the US, pretty much across the world. And a lot has changed since those early days. According to data compiled by one consultancy, as of December 2020, there are now 256 neobanks out there. And based on that, over the past 2 years, a neobank has launched every 5 days somewhere in the world. Challengers have come to market with a digital-first approach, a fresh mindset, focused on the customer, but often struggling to make real revenue. So what does the future hold for challengers? What is the future of challenger banking? Today, Temenos has pulled together a number of experts to help us understand what the future looks like for these players, what they're trying to do, what part technology plays, and what we should expect over the next few years. So let's introduce the panel. David, can you give us a few words on who you are and what you do?
Hi to the audience. My name is David Hornery. I'm the co-CEO of Judo Bank here in Australia, a fully licensed challenger bank that we received our license just on 2 years ago and purpose-built to serve the small to medium-sized business market in Australia.
My name is Sue Laws. I have the pleasure of leading the Business Solutions Group for the Americas. And I've had the pleasure of working with many challenger banks here in the US over the years, and a pleasure to be here today.
As the Chief Experience Officer here at Temenos, my goal is to make sure that our clients, our banking clients, are always putting the customer at the heart of what they're doing. So it's really great for great design to be hampered by operational silos, compliance, legal, and I try to ensure that we find the right mix of compliance with that great design and make sure that those challenger banks, whether they're retail banks or neobanks, are being effective.
So it's a relatively short session today, and we're looking for those soundbite key insights that make all the difference. Let's start with the obvious question. David, talk to us about your mission and journey. You're making a challenger bank. How do you see the future?
Thanks, Jason. Well, my co-founder and co-CEO colleague and I, in about 2015, having worked in commercial and investment banking for 30 plus years, saw what was fundamentally a market failure in the provision of banking services to small to medium-sized business in Australia. SMEs in Australia are really the heartland of the economy. They employ 7 out of 10 Australians. And what we felt is that as the 4 major banks in the oligopoly that they have had hugely industrialised and dehumanised the offering to small business. Despite that, they generated $16 billion of a year of revenue, controlled 85% of the banking market, and did so at extraordinary returns. So we actually started thinking about, can we build a challenger bank purpose-built, focused squarely on the small to medium-sized business sector in Australia. Interesting, Jason, about your involvement, for example, in Monzo. We spent a lot of time in the UK looking at and talking to the Monzos, to the Aldermores, to the Shawbrooks, to the challenger banks that have been very successful in disrupting what was an oligopoly there in the small business market. So we began building in 2015, 2016, and for us, we were always going to be a bank. Many asked us the question, would you really want to be a bank? We were very clear that we did. One of the things that was always going to be the central piece of our proposition to small business in this country was going back to the craft of relationship banking as it used to be done a decade or more ago, where you've got a banker that sits across the table from the customer, builds a relationship with them over time, builds an understanding, is available, is responsive, does care about them, which is the complete antithesis to what we saw in the system. Now, when it came to technology, what was important to us is that we had everything in the cloud, everything as a service. With Temenos, becoming our core banking system. For us, the technology, the born in the cloud piece, was fundamental, but it was not something we defined ourselves by. It was something that was an enabler of that relationship proposition. So technology for us has been an enabler of bringing something to market where our bankers could operate from anywhere, where we're getting the natural benefits of scalability, of the safety of working in the cloud, of working with big partners such as Temenos to enable that relationship proposition.
And I think that's something we've seen elsewhere, that digitized banking can be the coldest thing in the world. Suddenly it's banking without that humanity, without that relationship. And in some way, whether it's a truly digital offering or a hybrid, bringing actually that humanity and that relationship to bear, actually adding to that banking experience seems to be the key. I mean, Derek, you've seen digital banks grow across the globe, mostly digitizing what came before. Are new propositions and target markets starting to evolve in different ways?
Yeah, absolutely. When digital became a table stake for a lot of banks, it was really about taking a lot of those kind of core transactions and making them available on a laptop or on a phone. And interestingly, the pandemic has kind of highlighted a lot of the things that the bank never got to. So still a lot of business banking transactions can't be completed without visiting a branch, or things like notification of a deceased estate can't be done without going into a branch and filling in a paper form. So there's still work to be done there. But what I think is really interesting is the new entrants that are targeting specific demographic niches in the market. So they're building products that kind of align with individual needs. Because at the end of the day, the financial needs of a college student are very different to the financial needs of a high net worth retiree. So we're seeing organizations like Greenlight, who are targeting children, STEP, who are targeting teenagers, and Current, who are targeting families with children, growing. And, we've had the pleasure at Temenos of working with banks like Flowy in Italy, who are, targeting environmentally conscious individuals, and Varo, who are trying to help the individuals who are kind of living paycheck to paycheck to break out of that cycle. So, they get paid 2 days early. They can round up purchases in order to create some savings. So we're seeing this kind of alignment of the product offering, not just the digital capability, but the ethos of the bank to what it is that the current, the individual is actually looking to try and achieve. And, you can't do this with traditional IT models of spinning up servers in a data center. It just doesn't work. It's where SaaS and cloud and APIs and even tapping into ecosystems, are really the enablers of these initiatives, but they are just enablers. But what's really fundamentally changing is the value proposition of the banks.
So that underlying proposition of realizing what the brutal realities of a customer's life is, and then using technology and banking to solve for those problems. I guess, Sue, you've got vast experience in working with challenger banks, particularly in the US. Is that what you're seeing? Will challenger banks become the new mainstream because they're offering more? And what does that mean for the sector?
Good questions there. So, Temenos, we've been serving over 70 challenger banks today, and it's a trend that, as we say, we've been seeing in Europe for quite some time, as Derek mentioned before, with the likes of Flowy and Flowbank. And really what we're seeing now is the challenger banks are really taking off in the US. They're increasingly becoming significantly more mainstream. They bring with them some very attractive offerings, very attractive collaborations, and they're really starting to generate a lot of noise. But what we're seeing of different trends, we mentioned that we've got Varo making US history by becoming the first fintech to get their national charter. We also see a different trend where we're seeing maybe a fintech that will acquire a bank because it's a little bit quicker than going to get their charter directly. So we're very much seeing the bank fintech mergers. So an example of that would be Lending Club with, say, Radius. And then a third trend that we're seeing is where we've got a brand new digital bank is being stood up next to the regular bank. So an example of that I would give would be Goldman Sachs with Marcus, even our own EQ bank from Equitable Bank. And basically all these three digital strategies, they're all very much disrupting the market, and collectively they're very much challenging the status quo. So, mainstream is really starting to change and embracing what these challenger banks are bringing.
So David, Sue talks about, the digital strategy and a lot about the technology. I know that you say Judo is born in the cloud, and I know that you do use Temenos Cloud. Is that a key differentiator? Would you describe yourself as a digital bank?
Look, Jason, I'd call ourselves high tech and high touch. So, there's a spectrum of those that are disrupting in the sector. Some are much more hands-on or much more relational. Some are absolutely hard-edge digital. I think we're a combination of both. The born in the cloud thing is fundamental to us in our capacity to scale over time, our capacity to generate the benefits, the safety, the security, the scalability benefits of working with partners in the cloud, rather than having to have large tech teams, large hardware service issues. But I go back to what we were talking about before, the degree to which tech platform for us is an enabler of that relationship proposition. In an Australian context, there's about $400 to $500 billion worth of outstanding lending to that sector. But if you look at the surveys that say, well, what is the level of satisfaction of small business with their major bank, of the 4 major banks in Australia, the average mark out of 10 is 2.2. And the biggest issue that they have is about an inability to access that relationship manager, an inability for timely decisions to be made or responsiveness, the turnover of relationship managers, so that, the oft heard issue that small business quotes about dissatisfaction is, I've just spent 12 months training my relationship manager in my business and now they've gone. I've got to do it again. So everything that we've built in a technology platform means our bankers can operate from anywhere, that it's a single sign-on, that it's hugely user-friendly. We've built the architecture underneath our tech platform to allow us into the future to grow into machine learning, AI, and so on. And so, we've used the tech platform to enable that relationship proposition, not only the build to date, the flexibility, responsiveness, and security, if you like, of everything we have, and effectiveness of usage of the bankers, but also to underpin our capacity to scale. One of the big challenges for disruptors or challenges is about your capacity to scale. And for us, being both high tech but also high touch, that's a core question that our investors ask us. And so that technology that underpins it is the backbone of that.
The technology has to be resilient, it has to be scalable, it has to be something you don't have to worry about, and that's the same for clients. But what I like about your answer is the best digital challenges are those that aren't enamored by the technology, aren't looking at chatbots and AI and just throwing them at a customer. They really are trying to understand and drive that relationship and service, I guess.
Exactly. They completely augment the customer experience from end to end. They make us easy to deal with, they make us responsive, they provide the bankers with insights that allow them to bring real value to that customer. And when you accompany that with the relationship proposition that is central to our CVP, that's a very powerful and very differentiated proposition, certainly from the oligopoly that otherwise controls the industry in Australia.
So Sue, there seems to be this powerful, differentiated, interesting proposition, but we've also seen a few challenger banks close their doors in the past few years. From your experience in the US, what do you think the key factors are in determining who succeeds and who fails?
Yeah, I think it's interesting. I think it all has to start off obviously with a very sound business model. And I think something that, Derek was talking about earlier is that product centricity is also really important. So understand what the target market is, understand what your segment is. Great example there with Greenlight going after the children and to help them to save more. So very, very focused on what your business model is, focused on the marketing and focused on the branding, and just know who you are and what that success is going to look like. But obviously, what's really important is all this vision is then has to be underpinned by really robust, the right cloud technology, open API, ease of integration. All this is so critical, exactly like David was saying with some of the reasons of choosing the platform, is it's enabling that platform to future-proof your investment so that you can grow and scale up and scale down as you grow together. And very much that pay as you grow. So through all of this, I think what's really important for the challengers is to be able to deliver a hyper-efficient business model so that they can be then passing the benefits back onto their customers too. And I think the two need to go hand in hand together to ensure that the challengers are successful.
And so, Derek, it almost seems like on one hand, we're talking about a different type of business, a different type of business model, something around services and products. We're talking about an organization that has to scale up and differentiate in what traditionally is a commodity and mature market. Do they have to stick to the net interest margin, fees and charges as of old, or are there new models to actually make money?
Like, I'm not the finance expert for the banks, but I can certainly talk about where we're seeing the opportunities. And it's interesting you talked about like untapped markets, and I think David's in exactly the right place. I think the business banking market is hugely underserved from the traditional retail banks that have, their kind of classic models for how they evaluate whether or not a business is worthy of their financing. So there's a massive opportunity there. I think as we've talked about the demographic niches, going after those specific groups, I can tell you that my bank lost part of my business here in the US because I wanted a mechanism through my banking relationship to be able to allocate pocket money to my boys when they actually did their chores, and the bank couldn't do that for me, but there was a fintech who could do that for me. So the bank lost that business, and we're going to see more and more of those kind of expectations. But the kind of service proposition that I'm tracking kind of the most and really, really passionate and interested in is the banking as a service or embedded banking concept. Historically, we've been doing this for years with car loans, where we took a banking product, which was a secured or semi-secured loan, and we put it in a car dealership because that's where it made sense for that product to be. Nobody wants a 6-year debt, they want a car. We've seen it happen with Apple and Marcus, where I think what Marcus are doing is they basically stood up a banking, service proposition. So anybody who wants to offer banking products, Marcus are going to take care of the balance sheet and the regulatory requirements, but they're happy for anybody else to be the shopfront for the bank. And what bigger shopfront can you have than someone like Apple? So they've embedded their products and services there. But, I think there are more opportunities to do this. Like, when I moved to the US and I started working with the company I was working for here, and I put my details into our payroll system, I then needed to enter a routing number and an account number for my salary, but I didn't have a bank account. And there was no apply now button inside of the payroll system to say, hey, do you want to get a bank account? And by the way, would you like to put a percentage of your salary away each month for savings? So, kind of building in that responsible financial behavior, but putting it inside of the payroll system. And, we've had the pleasure of working with PayPal on their buy now, pay later offering, where they've taken the concept of financing a purchase and embedded it right in the shopping cart. So, we're seeing these opportunities for banking products and services to become embedded, where people are thinking about what the banking product or service can facilitate. And, what David and Judo are doing is they're facilitating the growth of small business in Australia. So, how do you embed your products and services where the individual is thinking about that? And maybe there's a relationship with Xero as an online or financial accounting product to be had there. So I think there's a lot of traction, a lot of growth in this area. And it's important for the bank to still protect their brand and to be seen to be part of this relationship so they don't become completely disintermediated. But I think there are a lot of shop fronts out there beyond the branch.
So what have we learned? Focusing on the customer, building that relationship, maintaining that humanity, whether that's a virtual private banker or actually a relationship manager hybrid model. It needs modern cloud-based resilient systems that you can then really forget about while you build these new propositions. And and that this is a growth market, with 256 challenger banks out there now, and only more coming along the line. It seems like this is going to be, the de facto way of approaching things. So, panel, any parting advice for would-be challenger bankers?
Look, mine would be, Jason, that that so many of the incumbents are as vulnerable as they have ever been to specialist models, specialist models, or approaches to different parts of their value chain. So I would, having been in mainstream large banks for 30 to 35 years, and started a new bank when I was more than 50, as with my co-CEO, I would encourage people to have a go, right? There is so much market there. The technology that is available provides an incredible advantage over typically the outdated or legacy systems of so many of the incumbents. I'd encourage people to have a go. There is also more capital out there looking to back credible business models, credible challenges than there ever has been.
Well, we could talk about this all day, but unfortunately we've run out of time. So panel, thanks very much for your insights.
Thank you.
Thank you.
Thank you.